Welcome, everybody. This is Tesla Today. So for this show, we're going to look at three different videos. First, we're going to look at Ron Barron. He's a billionaire investor with Barron Capital, and he's going to share with us his prediction for the stock market in general. We're going to look at Dan Ives. He's an analyst with Wedbush, and he's going to share his prediction for what's happening with the broader tech market, the momentum of the boom, and what's going to happen in the second half of this year. We'll also look at a video of Tasha Keeney with ARK Invest, and she's going to share her kind of prediction of what's going to happen to Tesla in general. And finally, we're going to look at Tesla stock and see all the different downgrades and the various predictions of what's going to happen to the stock. So today we have Randy Kirk with us. He's an author of several books on Elon Musk. He also has his own YouTube channel, Randy Kirk. You should check him out. Thank you again, Randy. Thank you for joining me every Tuesday.
I always look forward to getting brighter.
Appreciate that. Okay, so why don't we get started first with Ron Barron and see what he says about the general stock market and how it's improving. Let's watch this.
The stock market in this whole period of time, with terror attacks and inflation and wars and pandemics, with all of that going on, the stock market is up 34 times since 1970 when I began my career. It was 1,000 then, it's now 34,000. And the economy, by the way, in that whole period of time, is also up. It's up 33 times. It's gone from $800 billion of GDP to $26.25 billion. So despite all this stuff everyone talks about all day long and trying to figure out what's going to happen, the market's up 33 times. And what I think is growth is now beginning to accelerate. And over the next 50 years, compared to the last 50 years, I think that you're going to have faster growth than 7%. But assuming that you get the same 7%, that means that you're going to have 35 times your money over the next 50 years, which means that the Dow Jones, which is now 34,000, will be 900,000. So when everyone talks about, well, is it going to be 32,000 or 33,000 or 30? I'm thinking about 900,000.
All right. Thank you, Randy. So you see, everybody keeps calling me the crazy bull, and then they call you the uber psycho bull. But when you just keep in mind what's happening with a broader stock market, it always keeps going up for over 100 years, typically because it's driven by some sort of technology innovation. It goes up for 5 to 10 years. There's pullbacks with the recession for maybe 2 years. The worst is the depression, where we saw for 10 to 12 years reduction. That certainly can happen. But in general, technology inventions keep increasing productivity and allows companies to grow and be much more efficient. And so he's just basically saying, look, this is what happened in the last 50 years. Here's what I think is going to happen in the next 50 years. Do people call him crazy Uber bull? He's a billionaire, right?
Yeah, well, productivity, a lot of people don't realize this, but productivity that's how you measure wealth. In other words, the more productive you are, the more wealthy you're going to be. The more productive an economy is, a country, a city, it doesn't matter. The more productive a factory is, the wealthier it's going to be. In my lifetime, we've seen so many major productivity changes. The one that I always look back to, and some folks in the audience might be too young to remember this, but email was a massive game changer. Because prior to email, the executives in a company would have a stenographer and a secretary. They would give their letter that they needed to send out to a stenographer, who would then go in and she might type it then, which had to be perfectly typed. Then it comes back to the owner of the company or the executive, and the executive then makes changes and sends her back to do the second version of it. And all of that was eliminated because now executives are sending their own emails, and huge efficiency increase. Well, ChatGPT has just done it again, and so many other things are going on that are going to make all of us wealthy by virtue of all these efficiencies.
Exactly. And this AI boom is a real deal. This is a generational kind of step change that's going to improve productivity of every single worker, every single company. This is a broad market. Some people are asking if this magnificent seven is limited to just these tech companies that we saw the bulk of the increase in the last quarter. But no, that's not the case. It's going to be for the next half as well. It's going to broaden out. That's my belief because of ChatGPT's productivity. But what's your estimate of what's happening to the economy? People are now predicting a soft landing. Is that still your belief as well?
I am predicting a no landing. So in other words, in fact, the Fed said the other day that they're expecting 1.1% growth for the rest of this year, or maybe that's for the total year, but they didn't suggest that we're going to go negative at all. So I'm predicting as well. I don't think we're going to go negative either. I think that inflation is already done. I think that we're going to be under 2% shortly. And quite a few people seem to agree with that. In fact, the bond market agrees that inflation is over because you've got the 10-year sitting there still at 3.7%, even after the Fed got all worked up last week and talked about more increases. The bond market, which is kind of your it's a voting machine. It's a voting machine out there that's voting on where the economy is going, and the bond market is saying no, inflation is done. Interest rates are not going up more, or if they do, it's not going to be consequential. And the stock market is saying that the economy is going to be booming. So that's how I get my information.
Yep. Let's take a look at trueflation. So you asked me to put this up here. What did you want to talk about here?
So first of all, trueflation, for those who don't know it, you need to be if you're interested in analyzing what's going on in the market, and right now inflation is a major issue. Hey, in another year, you probably won't need to look at trueflation, but right now that's all everybody's talking about, and it's definitely affecting all policy. Well, trueflation is a method that's used to get the inflation rate today, not 2 months ago when they got their data together, and then they finally report May's information, in the middle of June. No, trueflation is reporting every single day and saying where it is compared to the day before, the week before, the month before, and their information is coming in real time. And what they're saying inflation is right now is at 2.46%. More interestingly, I don't know if you can scroll down a little bit, trueflation breaks it out into all these categories, and you can look at it category by category. And if you go through, you'll find that, okay, this particular one is food and beverages. You can see that food and beverages has been coming down dramatically. It's ticked up here a little bit at the end, but if you go over and look, it's still below. I can't quite make it out. Is it
2.45? Yeah, 2.53.
2.53. So you're looking at even food and beverage, which has been one of the categories that was of most concern. That is down in the range you want it to be. You can go right down through all of those. You go to housing, transportation, housing, you can see going down. In rents, the bottom line there is rents. Rents have gone down even more. They are definitely between 0 and 2% at this point.
Yep.
And that's not just trueflation saying that. That is Zillow, that's Redfin. I saw 5 different reports the other day that all said that rents are now between 0 and 2%. So, you can go down to transport.
Yeah.
Also,
it's gasoline that was a big deal for inflation. And look at that 26% reduction. That's a massive. This
plus the
big
cost
one.
cost of freight as well. So all of these are now down within that range. And the overall combination of it is in the, again, 2.46, which is very, very close to what the Fed wants it to be. And you can see that the curves are all going down radically. And some of these where you see it going back up a little bit, they're still like this one. Here's a great one. It's still at 0%. Okay.
Yeah.
So,
it's 1.76%, but it started as negative and then it went to 1 point, which is nothing. Okay. It's not a big deal. Yeah.
Exactly.
Right.
So even education, which has been one that's been talked about for years, education is sitting here at basically 0.
3%. Yeah.
Yep.
Okay. The change is minimal, but it's it's been a good, fantastic view. Okay. I love doing that. Thank you so much for sharing that. So inflation seemed to be, if you look at trueflation, which is the most recent numbers, database is connected real time, as opposed to looking back months ago, it's looking like it's good. So in your prediction right now, you don't see a no landing, no recession. That is a concern some people still have because of this. They just got burned last year. But you're pretty confident about the coming second half. Let's take a look at what Dan Ives believes, what's happening with the broader tech market, the momentum, and what he predicts for the second half of this year. Let's watch this.
Tech trade. It has been the runaway winner of the first 6 months of 23. Let's ask Dan Ives. He joins us here on set at Post 9. It's good to see you.
Great to be here.
So you had a note today, 12 to 15% more for tech? That's what you see in the second half?
I mean, we believe this is the start of a new bull market for tech. And I think ultimately it's going to be broader. It's not just that, call it 7 or 8 big tech stocks. We believe fundamentals are not just stabilizing, but actually starting to see for the first time upticks across cloud, across enterprise. And then, of course, you have this AI gold rush, which I view as a fourth industrial revolution.
Would you be willing to admit that the gains we've seen from the beginning of the year to now were multiple expansion? It was based on fundamentals, right?
I think the first half is multiple expansion.
Okay.
I think the second half is starting with earnings over the next month is going to be fundamentals. I think this is really where a lot of these companies, they ripped the Band-Aid off, and we're seeing really across the board, especially over the last 4 to 6 weeks, a much more dramatically different IT spending environment than we saw going back to February, March, even April.
Okay, so when he talked about taking the Band-Aid off, he's referring to the firing or the kind of laying off of employees. And then he's talking about fundamentals will appear the second half of this year because of this, this AI productivity increase, that you can actually see that, not just the PE multiples, which is what we had seen. And we had shown already previous videos, by the way, Randy, that in the PE multiples that went up, it's nothing compared to the internet boom, where those guys went psycho thousands of PEs, but yet many believe that this AI boom is bigger than the internet. What was your reaction to what you just saw there?
Yeah, I'm sorry. This is definitely bigger than the internet boom in a different way. So when we had the internet boom, I was actually listening. If you haven't seen it yet, I'm encouraging everybody listening to look at Lex Friedman's interview today. I'm going to forget the guy's name. He was the founder of all the early all the original browsers. Anyway, look up that video. And he was talking about in those early days, and I remember, I'm old enough to remember, the internet was not available.
Yeah, that's Mark Andreessen that you're talking about that he did.
That's
and
right, exactly.
He's talking about just massive what AI boom is going to do. Mm-hmm.
Yes, but he's also talking about how it was back in the 90s. You couldn't just jump up on the internet and get involved. And then when you did, there was nothing there. There's a lot of, and it took 4 or 5 years before people were really able to use the internet as a tool. And even then it was still slow and very difficult to use, very difficult to put your website up, et cetera, et cetera. Well, now with ChatGPT and with all the stuff that's coming out of that revolution, no, we've already got everything we need. This is not going to take years. This is going to take weeks for a lot of companies to see the benefit. I'm already seeing the benefit in my little YouTube channel. I'm able to go in and ask it for good titles or ideas for thumbnails. You can ask it to write the script for you if you want to. So every company across the board, to the extent that they take advantage of it, can immediately start using these new resources. And then there's apps on top of apps on top of apps coming out that are free or $1 a month or $5 a month that help you to get even further deeper into this GPT revolution. And yeah, it's going to be an immediate game changer and make the business world much more efficient in very short order.
Yeah, and the question is, will it appear in the second half of this year? Let's take a look at Dan Ives' second little clip here and see what he's saying.
$1 billion raise.
Sure, but not every company on this list is NVIDIA with the kind of guidance that they gave. Are you expecting similar type guidance from other names on this list?
I believe this quarter, for the first time, what you're going to hear from Redmond, what you'll see from Google, I think what we start to see, you're going to now start to see the signs of what ultimately is going to be just a massive expansion of growth that's coming in. That's why I believe multiple expansion was the story first 6 months. Second 6 months is not just talking the talk, it's walking the walk.
Yeah, but doesn't a potential recession or even further economic slowdown hurt potential enterprise spend on some of these things that are enabling these AI-related stocks to, soar?
No doubt.
NVIDIA's not giving away its chips for free.
No doubt, but I do believe what started to happen is it's this different IT spending environment that we've seen the last 4 to 6 weeks than really for the first 4 months of the year. And I think that's all going to start to play through. And I still think many investors are expecting whether the next shoe to drop, numbers are going to come down. But ultimately, I think in terms of tech, that Band-Aid was ripped off, these numbers start to come up. And I could tell you a lot of my institutional investor conversations, many still on the sidelines. And I believe after this earnings season, it's really going to cause what I view as really a tidal wave of growth coming through.
Tidal wave of growth. Sounds like your language, Randy.
Well, once again, I know that I have the reputation for being an optimist, and I am. But I think if people will take a step back, if you're an owner or a manager, you're probably already seeing this. This is not something where you have to go out and spend $1,000 or $10,000 or $50,000 to buy a piece of equipment, and then bring in people like in the old day, the phone systems or the first time I bought a server, and then you have to have the customer service people come in and you spend a week learning how to use it. No, none of that is necessary. This is going to be a situation where the companies that are the providers of this kind of these kinds of services, it's going to be how much a month is it, not big pieces of equipment or big capital spends. And it's a matter of how much a month, and then you multiply that, $100 a month times a million customers, and it turns into real money. In terms of the smaller companies being able to put it to immediate use, again, we've never had anything where I'm hearing from small companies that they're already putting it to use right now.
Okay. Hold on. Something right here right now. So I'm trying to search for a poll I just did where I was asking people what percentage of the stock rise increase over the last several months is associated with the AI narrative. And looks like that they're saying 33% of the respondents, that's 645 votes. 33% of respondents says zero. So zero of the stock price increase for Tesla over the last several months is associated with the AI narrative. 40% said 1 to 20%. And then 16% said 20 to 50%. And then 10% of people think that 50% of the stock rise is because of the AI narrative. What's your reaction to those poll numbers?
So I think that maybe 10% of the rise over the last 5 weeks has been due to the AI thing. Elon Musk has been out talking about this. Remember, PR is massive, and Elon is an expert at PR. He's out there on the talk show circuit right now for a reason. He's got a new story to tell. He started telling the story a year ago, maybe, when he said that Tesla is an AI company that specializes in robotics. That's the new description or definition of who Tesla is. But that doesn't, because he says it once or says it 5 times, doesn't mean that the public or the investing public begins to get it. Tesla has been an energy storage company now for 2 years, and I don't think that the street gets it yet. So he's been out there hammering it and hammering it and hammering it, how Tesla is the leader, far and away the leader in this space. But then you see the stock goes down in the few days just following the announcement of how Dojo is, going to just multiply 100 times the capability that it has today. It's going to 100 times that within the next 18 months. But did that make the stock go up? Well, no, the stock has actually been off. So, it's not the AI, it's the total picture as well. Again, I've been saying this for months. You got to have the economy looking okay. You've got to have the investing community feeling that the economy is going to be okay, so that you have more of a risk-on environment. And then Tesla has to be hitting it out of the ballpark. They have to be executing. And that is what we'll find out next Sunday.
Yeah, that's what we'll find out next Sunday, June 2nd, when we're going to see the
July
Tesla
2nd.
reporting. What's that?
July 2nd.
July 2nd, when we're going to see the Tesla reporting on deliveries and production. So we've seen Tesla stock basically rocketing up since January 1st of this year. In the last several days, we've seen it soften. But you're like we're all saying, looking like the economy's in control. We saw a little bit of like a positive news, I guess, depending on how you want to look at it, on the war, and then it kind of pulled back. We don't know what's going on there, so people are kind of still on edge of what might happen. The AI boom happened, and some people are going, this is kind of the reduction in the stock in the last few days is because of people thinking that the AI boom is softening. Like I said, no, it's not. It's just we haven't seen anything yet with AI boom, but certainly people haven't absorbed it yet, and they're not going. It's not always going to be a straight line. What's your thinking of what might have happened the last several days? I know that you and I are both long-term bulls. We don't really want to look at the days, but if you had to guess, what was it that's happening right now? And is it going to continue on this week, or do you have an opinion on that?
Sure, I absolutely do. I always have an opinion, right, Herbert?
Yeah, you do.
Well, okay, but I try at least to have my opinion be based on something other than just pulling it out of thin air. So my opinion is that no stock market increase, no bull ever goes straight up. And Tesla stock, which has gone straight up a couple of times, I did an analysis of the chart a while back, and man, they've had that 2019, 2020 was that I'm probably getting the years wrong, but one of those runs was almost straight up. It was incredible for a couple hundred points, but typically you don't go straight up. Typically you take breathers. There's people out there that have a goal, a plan, and when they hit the plan, they take something off. Are there technical analysts and they have a number where okay, that technically is as high as it's going to get. I'm going to take some, or I'm going to take all of it off. You have people that are, that have all kinds of investment theories. And so typically the general market and any given stock, even if it's on a run, even if the fundamentals look amazing, there's going to be times when it's going to take a moment. So over the weekend and this morning, I have been looking at every technical analyst that I can find. And I've been looking at the ones that follow Tesla. And I've been looking at what they've been saying the day before, today, even after the stock market today. Every one of them practically has Tesla now in a range of 235 to 290. So this is the range that we're in now. I'm not a technical analyst. I have followed the technicals for, 50 years, but I'm not a technical analyst, and I don't use that very much as how I guide myself. But interestingly, this morning, we went down to 241. We're only this far away from the 235. And we also bounced off the technical level of 275. So, I have repeatedly been telling my audience the technicals work because some people believe the technicals, even if they don't work naturally. If you have 20% of the investors following the technicals, then it's going to work. It's a self-fulfilling prophecy. So to that extent, you need to pay a little bit of attention to technical and analysts. So I'm pretty much convinced that we will touch 235 tomorrow. I think we might close at 235 tomorrow, might close it in that range, and then it's off to the races. We might have to test it a second time under technical analysis, but if we do, that might be Thursday, that may be Friday, and then we get the numbers on Sunday, and I think the numbers will be good. So then it's the bull returns, and for the stock.
Okay, I should clarify that this video is being published on Tuesday. You're talking about, but we recorded it the day before Monday. So you're talking about Tuesday. That's what you're predicting. Now, there's a lot of folks who I've been talking to that are saying that the stock has as much chance to go down to 200 as it does to go up to 300. In my mind, I'm not worried because I don't see anything changing in Tesla's business. This pullback that we're seeing right now in the stock, it's not being driven because of some negative news about Tesla. It's not because all of a sudden the CyberTruck is not going to run out because they're no longer the leading EV company, and they're having problems. There's new competitors that's going to wipe them out. Nothing of that has come about. This is just strictly stock movements and just kind of sentiment. And so for me, they're actually going to have a higher chance for it to hit 300 than it does to fall back 200. But you cannot predict. No one can predict what's going to happen. Let's share here what Gary Black, he's an analyst, and what he's been saying about what he thinks what's going to happen here. So he sent this tweet about 4 or 5 days ago. And he said that the average Wall Street Tesla price target is now $209, up from $195 2 weeks ago. While we were right about Wall Street analysts increasing their Tesla price targets pre-earnings, we didn't expect analysts at Morgan Stanley and Barclays to downgrade their ratings before the launch of the Cybertruck in fourth quarter. Why would they downgrade their ratings? Others like RBC and Wedbush have raised their price targets while maintaining their buy ratings. We'll see who is right in the coming months. So we've got, this is kind of a nice table that shows that of all the analysts that they're following, 48% of them have a buy rating, 36% of a hold rating, 16% of a sell rating. And the average 12-month price target is $207. And if you look at this list here, these are the RBC and Wedbush. They're right at the top here where they're showing outperform and buys, and they're targeting 300s and 305. Then you got Barclays down here where they lowered their downgraded, but they're still at the 260 equal weight. Then you've got the others here like Morgan Stanley, which we'll be talking about shortly, where they just announced, we're going to describe how they announced a downgrade, but they're still at 250. And then if you look at these guys down here, Deutsche Bank has always been at the bottom. Goldman Sachs has always been at the bottom. And they're the ones that actually have a downgraded rating as well. And they're way down here below. So they're always have been very, very pessimistic and bearish about Tesla. What's your concept, or what do you read on this?
So if you take kind of an average, I know I'm not going to take the 209 because that's not really, I don't think it's as relevant. I think the average is roughly 250. The serious guys are around 250. The 250 would, because that's a 12-month price target. So that's assuming it's not going to be above 250 from now till next July, after the Cybertruck's been out for 9 months, after the Generation 3 has probably been revealed, after the Mexico factory's half built. I mean, it just go down the list. After the Shanghai second energy storage, the power, that thing, the mega factory has been either built or almost built. So you have all these really significant things happening over the next 6 months. And the 250 assumes a $5 earnings in 2024. In order to have $5 in earnings in 2024, you have to stop production at 2 million cars. Even though you're going to increase by having a Cybertruck, even though you're going to continue to ramp up the Model Y in 2 factories, and even though you've got the refresh on the Model 3 that's probably going to increase sales, even though all 3 of those things are going to be happening, you would have to cut off the numbers at 2 million units in order to get to only $5 a share next year. Is that really realistic? Is that even within the realm of possibility in a really horrible market? No, it's much more likely that they're going to be somewhere in the 2.3 to 2.8, maybe even 3 million level next year. I'm showing maybe $8 to $9 a share is my likely. I think that's my bear case, or my bear case might be 7. My base case is 9. Well, you take 7, my bear case, and you multiply that times 50, you're at 350. So how do you get to 250? I don't even know. I can't figure out how you can get to 250 if you're using your brain at all and don't assume that there is not going to be another pandemic or something.
Yep. And I don't know why everybody's still using the 50 PE ratio. First of all, you got to look at forward PE. Secondly, this is a growth company, and they are going to sell every car that they make. And because of the discounts, that's why some of the earnings next year has been compressed, but they're going to sell every car they make. And that, I think other than Europe that's having major global issues, it's looking like we're going to be able to sell 2 million cars this year, 2023. And the PE ratio is tied to, a recessionary down, bearish market. If this gets back up, you got the AI boom, like I was explaining to people and showing them what the PE ratios were like during the internet, go-go days. We're talking 1,000 PEs. In 2012, it was 1,000 for Tesla. And Andrea James was a bull for an analyst firm, and she was saying, yeah, it's 1,000, but it's a growth company, very different company. They were small, and it
Right.
was kind of this money rich, printing environment. We're not there, but 50 is a ridiculous PE ratio, but we'll see what the investors give it. Let's continue on with what Gary Black says about this downgrades that's been happening. Curious to think what you said, because you're the one that pointed this out to me. So Gary said there are two types of Wall Street downgrades, right? There's number one is downgrades on fundamentals, and two is downgrades on price. So you can have a downgrade because of a fundamental shift in a company or just because of some sort of price that they are anticipating. And then he says, the first type, downgrades on fundamentals, I pay attention to. Changes in category volume trends, losses in market share, pricing pressures, margin erosion, inventory increases, changes in financial flexibility, they can change my valuation estimate. So let me ask you, Randy, do you see any of these issues in Tesla today? Is there any issue with each one of these?
And this is why it's so unbelievable to see these individuals coming out with these price targets. The volume trend is nothing but up. There is no loss. The losses in market share. I know we've been over this on your channel before. Nobody cares about what Tesla's market share is with regard to other BEVs. It's only what their overall market share is. If you're selling all you can make, market share is inconsequential. Pricing pressures. Well, the pricing pressures were there at the beginning of the year, but Tesla just raised their Model Y prices again this morning. I'm sorry, on Monday morning. Margin erosion. If anything, margins are going to be increasing. We know that the cost of raw materials has gone down. The commodities have gone down. We know that battery costs have gone down. We know that they're selling way more Model Ys now as a percentage of their overall sales, which is going to increase their margins because they make more on Model Ys. I could go on about margins. Their margins are definitely going to be going up. Inventory increases. No, we've just seen that the inventories are almost gone for almost all vehicles now in the United States. Those are numbers that just came out Sunday and Monday. Changes in financial flexibility. Oh my gosh, this company has 23 billion in the bank. At least we'll find out it might be 25 now when we get reporting next month, and they have no debt. So their financial flexibility is maybe better than almost any other company that exists today. So the valuation estimate wouldn't have changed based on any of those. Now, these guys did increase their price targets, but they increased it to numbers that were ridiculously low, in my particular opinion.
Yeah. So, I mean, obviously, pricing pressure. We had a reduction in prices, like you said, huge discounts in the price in the beginning of the year. Now that you are at price parity with ICE vehicles, there, in fact, if anything, Tesla is the leader. They're the ones that are pushing prices to everyone else. They can raise it if they wish to, and they do, basically inflexible pricing. Margin erosion, that happened because of the pricing reduction. But like you just said, all the scaling of the several gigafactories and the reduction in the resource, the elements cost, lithium and others, which is the number one contributor to margin issues, lithium, this is it's basically bottomed out. And that's one of the things that many people are saying. If in the Q2 earnings, they show that margins is basically flat at 18%, or in fact, it could even grow. But if it's at least not being driven further down, the stock's going to skyrocket because they know that margin has stabilized. And then inventory, I think we need to warn people to stop. You can no longer, like, how we used to all track inventory, like what's going on. And we got people like Troy Teslake and he's falling. These things are no longer as important as the years go on. There are so many factories out there. There's so many regional markets. Each one of those goes up and down. There's so many different, trims. These things are not as easy to track anymore. And it's just going to get even more harder as more gigafactories are produced and so forth. So that will change over time. Okay, so let's continue. So basically, he then said the second type I usually ignore as noise, which is the price. So the first one, yes, if it's associated with fundamentals, you better watch it. But as we said, I don't know, and I don't, unless somebody can point out to me, has there been some fundamental change in Tesla's business in the last several quarters that is critical for why we think that the price should go down from where it is today. But the downgrades have been mostly on price, and they have a shelf life of about half a day. They don't change my valuation estimate. So all 3 Tesla downgrades this week has been on price. The market tends to ignore them without a change in fundamentals. That's his concern. What's your reaction to that?
Yeah, so I will not claim that I have followed or paid a lot of attention to how the market responds to these different kinds of downgrades. All I can say is that the market did respond apparently to those downgrades, even though, as I had predicted at the beginning of the week, Tesla will follow the NASDAQ this week, but it followed the NASDAQ with a pretty big delta. So it was significantly more down than the NASDAQ was. But I'm predicting for at least through Wednesday that the Tesla will follow the NASDAQ. Thursday and Friday, who knows? All bets are off. Tesla has been completely dissociated from any of the other indexes for the last 5 weeks. And I'm thinking that they'll become dissociated again as we get closer to the weekend, because you have the numbers coming out on Sunday. You have the end of the quarter. So you have a lot of window dressing taking place out there that's very hard to predict. And you also have the CPE inflation numbers coming out on Friday, which could radically change the market if those numbers are much higher or much lower than expected. And they're expected to be still around 4.5, even though, as we pointed out earlier, that trueflation is showing 2.4. So if those numbers came in, let's say at 3%, year over year, with maybe a 2.5, I mean, a 0.25 or a 0.3 number for the month, wow, that could really impact the market.
Okay, so let's take a look at Goldman Sachs. So they downgraded Tesla on Monday, and let's look at their reasoning and their thought process here. So that's good. It follows downgrades from Barclays and Morgan Stanley, as we pointed out earlier. So the stock went down, and they say this is one of the reasons is Goldman analyst Mark Delaney took Tesla shares down a peg. They downgraded the stock from buy to neutral. Okay, and Delaney weirdly downgraded the stock, but he raised his price target to 248 from 185. So he's really just downgrading it for now, but long term, he's still very bullish on the company. So they were originally at 185. Don't you love that? They raise it up because it's no longer 185. So he's got to raise it. So you got to wonder, like, it's like, oops, we made a mistake. We better raise it. And then, but let's still be a little bearish.
Yeah.
Anyways,
I agree with Gary Black. Give me your numbers, and I'll decide whether I like your analysis or not. But if you're telling me that you think there's problems with margins, or you think there's problems with sales going up, or you think that the CyberTruck is not going to have a great launch, I mean, give me some reason. Give me some. And sometimes they do. Sometimes they'll give you, a 60-page report that you can dig into. But these particular ones this week, they all seem to be, oh, the stock is at 275. I guess we better raise our price target.
Yeah. Here's what their reasoning is. They go, while the primary reason for the change in our view is that we think the market is now giving the stock more credit for its long-term opportunities. We think that it got ahead of itself. We're also cognizant of the difficult pricing environment for new vehicles that we think will continue to weigh on Tesla's automotive non-GAAP gross margin this year. So they think there's going to be pricing. They're going to need to reduce prices some more. So they cite a combination of factors explaining the recent run-up, a surge the firm said exceeded our expectation in terms of magnitude. Overall, we believe our view that Tesla is well-positioned for long-term growth, given its leading position in EV, clean energy markets, software service sales is now being reflected in the stock. So they think bullish of the company, but they're just playing the stock market for the next short period of time.
So maybe they should have said, this is our price target for the next 30 days.
Exactly. Yeah, that's a good point. That's a very good point. That's what's critical is what Gary said, which is whenever you see a downgrade or you see people buying or selling, it's for short-term reasons, not for fundamentals of the company. Okay. Any last comments about the stock as we move on to other news that's happening?
I thought you had another short video from ARK Invest.
No. Did I not play ARK Invest? Yeah.
No,
let's do that. Okay, sorry guys. Tasha Keeney. I wanted to play her right off the bat. Thank you. Forgot about that. Let's go ahead and do that.
Tasha, the economy is not the stock market. One can go up while the other's going down and vice versa. Tesla and its stock, at some point, are they the same thing or could they be different? And I mean, when a stock of this size doubles that quickly, you can't help a guy for having, the radar up a little bit.
Yeah, I mean, I think that, ARC focuses broadly on innovation. And we find that, if you're looking backwards, it's very tough to predict sort of these exponential growth stories that we see. And I think that Tesla is just the perfect example of that. So again, I mean, we think that the expected value is $2,000 per share over the next 5 years. So this is just, it's been an amazing story, and we think it will continue to be an amazing story because of that unparalleled data advantage. Of course, they have a charging advantage. Also, they recently announced that they plan to have 100 exaflops of training capacity by the end of 2024. That's up from 4.6 that they announced last year at AI Day. So they're also going to have access to training that they can use for full self-driving, for their other AI projects that really very few companies have even access to, and they're actually building it in-house.
What do you think about ARK Invest, Randy?
So actually, I think you liked my tweet just a little while ago on this subject. There is a greater than zero chance that full self-driving will be solved within the next 12 months. There is a greater than zero chance that Tesla will have a reveal on Optimus and begin to lease them to the general public or to the manufacturing public, if you will. And there's a greater than zero chance that within the next 18 months to 2 years, that robo-taxis will be on the road. That doesn't even count things like Optimus. like Dojo as a service or some of the other categories that could go crazy. Those three are all never before seen kinds of numbers of potential profit. How do you value something that is worth the potential of trillions of dollars in income per year when no company has ever done $1 trillion in income per year? How do you value it? If you even have a little chance, a small chance, and then you take three of those together, FSD being the smaller of them, but robotaxis, Elon says it's bigger than the rest of the company combined. And then Optimus is bigger than when you combine robotaxi with the rest of the companies. Optimus is bigger than that. So if you have a greater than zero chance, and I'm going to say it's way greater than zero, a 30% chance, maybe even whatever number you want to pick, that Optimus will be available for sale or available for lease within the next 12 to 24 months. How do you value that now? And how is it not already creating a value proposition that everybody wants to at least get a little piece of in case it happens, because it looks like it's going to happen?
Yeah, I mean, I've been saying this as well. So as an investor, you should be forward-looking. You should try to get ahead of the game. You want to invest before it happens, and so you do take a little bit of risk of thinking that it's going to happen this year or the next 3 years. You certainly don't want to invest in a company and it takes 5 to 10 years. So the question is, one of these three going to happen within 5 years. But the other thing I keep trying to remind myself is that you don't need to see it actually happen. You just need to know that it's inevitable. So when a company, let's say a biotech company, and they do phase 1 and phase 2, people invest. It's a hope and a dream because it's looking promising. It can completely crash and burn because it doesn't work. But if it works, it's this amazing bet that is like billions and trillions of dollars of revenue for the company. And so people put that bet in. Now, in this case, it's not like that. We're seeing the bots already moving around. We know that they have the 5th largest supercomputer in the world by January and 10 exaflops by next year. Now you can say, well, they might be delayed. Sure. Okay. Let's build in 2 years, 3 years. But at the end of the day, they are one of the only companies making this progress. And so the investing community just needs to realize that it's inevitable before it actually comes. And right now, they're kind of, most of them, 90% are saying, this is not going to happen. You're dreaming. This is something that's going to happen 10 years, never in my lifetime. I'll never see bots. I'll never see Robotaxi, it has so many edge cases, it's never going to come. So those people, they just won't invest in this because of that. But like you said, zero is non-zero chance, but it's probably higher than we all think. But okay, so that's part of investing, right? Part of investing is people kind of like have these hopes and dreams, and others are, they think we're crazy. So we'll see what happens. Yeah, so ARK Invest, they struggled in the last 5 years, right? You can see that their bets have not paid off in the last 5 years. But I'm more like them, though. I do appreciate them because they look at these kind of secular changes in innovation. And number one, you buy into a company that is innovative, and two, you're looking for kind of this broader change in the market. The question is electric vehicles going to take over gas vehicles? The answer is yes, and it's proven out at this point. It's hard to find anybody who believes it's not. Is robotaxi inevitable? I think the answer to that is yes. I think the vast majority of people know that it is a matter of time, but they'll debate you in how long it will be. Are robots inevitable? I think the vast majority of people, and anybody who knows anything about AI and creating bots, know that the answer is inevitable. And so each one of these things are going to happen. And it's just a matter of taking that long-term bet. And so I kind of, I do like their thinking, but they're long-term investors. And so people can point at them and go, look what happened to their stock in the last 5 years. And it's painful. And I think they're right in many ways. I'm not saying that they're wrong, but I do appreciate that. And I think that they will prove themselves true in the future. I just don't like how they spread out their investments. I still think that Tesla is the one that's going to solve these things.
So ARK Invest is like a venture capital firm. They only have to have one of their companies go crazy. They can have 9 failures. That's their whole philosophy is just like VC. And so, yes, she was the golden girl at the end of 2021. She was practically on the front. She was on the front of magazines. I mean, they were, oh my gosh, she made more money than any other fund, on Wall Street. But if you're investing in those kind of stocks, then when the other side comes, when you've got a risk-off environment, well, those are going to be hammered the most. So they were hammered the most. As we get back into a risk-on environment again, she's going to be the darling of Wall Street again. You'll see. It's just a matter of time. And I do have I'm sorry, full disclosure, I do have a minor position in ARK.
Okay. And we're talking about Kathy Wood there, not Tasha Keeney, who works for Kathy and ARK Invest. Okay, good. Great conversation. Let's talk about some news that happened on Monday. So the most recent one is, looks like here that Tesla's going to pull out of the Gigafactory negotiations in Spain. This was just reported. And so they say Tesla said they're no longer interested in building a Gigafactory in Spain. Because of news of their negotiations leaked to the media. So earlier this month, Tesla was close to signing a deal with the Gigafactory, a deal that could have been worth as much as $4.8 billion US dollars. But because after the news of the possibility of the merge, a spokesman for Valencia's regional government confirmed with a local media outlet that meetings and conversations about a large automobile investment had taken place, and that those discussions were very advanced. So they leaked it. Tesla was apparently furious about the leak. And despite being well into negotiations, talks have broken down and the company no longer considers Spain as a potential location. This was reported as Valencia's digital economy newspaper, citing sources that have spoken with the current president of Valencian government. So, So that's, Spain's not it. It looks like, very likely. But we've got a lot of other options.
Yeah, well, so that kind of surprised me, actually. You showed me that just before we went on air. And I thought to myself, it seems to me that the Mexican government was doing all kinds of leaks. It seemed to me that the Indian government has done a couple of leaks. I think we've heard of leaks before. I wonder whether these leaks were more egregious and whether there had been some kind of specific discussion about not talking about it. So I guess we'll never know, but I'm sad about this only for one reason. After Italy, Spain is my favorite country to travel in. in Europe, and this would have been a good reason to go, but that's no longer true.
Okay. Yeah, Spain was actually my top choice. If I looked at all the potential countries, I thought Spain would have been the most logical place to put a gigafactory in. Not a fan, as Alexander Merz is not a fan of France. I guess I'm okay with Italy, but I prefer Spain. But now this is interesting to see. But at the end of the day, this again, there are discussions happening. When Elon flies out there shaking hands, this isn't just kind of like, way in the future. They're making deals. They're negotiating in detail now. You can see there that they talked about, the talks went in deep detail. So Tesla's in growth mode. They're building multiple factories around the world. And he's talking to these massive, these important heads of states, and they're, jumping as much as they can to give Tesla as much kind of deals that they can to entice them to come there. So Tesla's in pole position, and these deals are about to happen. And so for me, it's like yet another thing. It's interesting, Randy, like whenever you hear people talk about the future of a stock or what's going to happen, they rarely they think that the world kind of stops and what we have now is what it is. So they're going to go calculate how many cars are going to be produced by these gigafactories that are built today. And they're not going to think about the fact that within a year or two, there's going to be yet another couple gigafactories announced. There's going to be yet another couple megapack factories announced. There's going to be possibly a brand new business that we haven't heard of, just like they announced robots 2 years ago, just like they announced lithium refinery a year ago. There's going to be a brand new business they haven't talked about. We're going to see progress in every single division of every business we're talking about and more. And so these things, the whole point of investing in Tesla is that it is an innovative innovation machine. And they're just going to continue to cut costs. They're going to continue to, improve production. Everything's going to improve. Margins will improve. Costs will improve. Sales will improve. And so you can't just measure out what it is today and assume that it's going to actually go down. It's like the chance of it going down is less than the chance of it going up. Anyways, that's why we're bulls. We're a little bit more bullish than others. So that's kind of explains my thinking.
Yes.
That's all you're going to say? Yes.
Did you think? Let's see.
Just kidding you.
I agree with you.
I know you do.
Across it well.
I know you do.
Okay. What's the first rule of investing? I've been investing since I was 18 years old. What's the first rule of investing?
Don't lose money.
You look at the odds. You look at the odds of success, what the percentage is of success, and what that success looks like in terms of return on investment. And then you look at the risk side of it. What are the odds that it's going to fail, and what will be the cost of the failure, and in between. And if you do that on Tesla, and you go, okay, what's the worst case that anybody's talked about this last week? I think the very worst bottom one I could find was that Tesla goes all the way back to 165, where it was 2 months ago.
Yep.
It goes back to 165, and then it bounces off of there. What's the upside? $10,000 a share?
Sure. No, but yeah, it can go down even further, right? It can certainly fall. But the point is that the company, if it falls, it's more likely a temporary fall because, again, the company's not going to go bankrupt necessarily unless you show me a $23 billion kind of, big giant mistake and, some sort of massive change in the EV market. Those kind of things need to happen before you go, okay, Tesla's in danger. I do want to clarify and make sure that I make this point that I'm just justifying my thought process for my situation and my approach for investing for my situation of growth and where I want to put my money. Absolutely, people who have to spread out their money, people who think that who need to protect their money for various reasons, that is absolutely the correct approach. In no way do I disparage that because there was a time in my life that I was doing exactly that. There was many points in my life where I was investing in dividend stocks. I was invested in REITs, real estate bonds, and so forth. And so none of that is wrong. It's all correct. It's just that for me, I'm just justifying my own thinking as I go through this. Okay. So one other bit of news that happened on Monday was there was a rumor. This is just a rumor that according to sources, Tesla's Shanghai factory has started a small batch production of the new Model 3. Again, this concept of the revised Model 3 Highland And it looks like the Tesla Shanghai has started small batch production. So there's people in China that are on the ground. They can talk to employees there. And that's what they're saying. The source said that in order to strictly prevent filming, Tesla's Shanghai factory is now jamming the GPS. So you can't be filming anymore. Checking that out, and this is just a Photoshop of our photo of the Giga Shanghai. So just a rumor, but again, so many things have been happening with the Tesla Highland Model 3 revision. It's still quite up in the air because some people are saying it's going to happen this month, some people are saying it's going to happen the second half of this year, and some people even next year. So we don't know timing, but for anybody to say that there is no Tesla Model 3 revision, it's going to be a stretch because there's just so many sightings of this. There's so many, so much smoke appearing everywhere that it's hard to believe it's not going to happen. But timing-wise, I'm not going to sure. But this is a rumor saying that it's happening faster, sooner than we realize.
So a star of your channel and a star of my channel and a star of his own channel, Brian White,
yes,
who's really become quite the star recently.
Yeah.
So he's on my channel the other day. We're talking about the Model 3, and he says, Randy, he says, the sedan market is not as small as everybody talks about.
Yep.
And I went, what do you mean? What do you mean? Because, I had bought in, and that's not like me. I had bought into the idea that the sedan, and I drive a sedan. And I'm like, okay, what do you mean, Brian? He goes, look, the U.S. manufacturer of sedans is gone. There's only Tesla. That's all. Just the Model 3. It's about all the U.S. manufacturers. But the Japanese make a lot of sedans. The South Koreans make a lot of sedans. The Chinese, no, the sedan market is not gone, not even in the United States. And I started trying to do research on it, and it's surprising how little research there is available, how many places I can find that are giving me numbers.
Now, Randy, you go search for a video that Brian and I did.
Okay,
I pulled out all the data of the global demand for sedans, and it's massive. So in the US, the demand for SUVs is over 40+%, and the demand for sedans fell significantly, but they crossed each other, and now sedans are less. But Brian's pointing out that the reason why that is in the U.S. is because the U.S. manufacturers can't build a profitable sedan, so they stop pushing it. But globally, the sedans is 30+40% also, so they're massive demand. So that's why I'm saying it doesn't make sense for Tesla to not have a sedan. In fact, what doesn't make sense is for Tesla to have a truck. Why do the truck if you've got this massive 35% market that you can do with a sedan? So the issue, as we've been pointing out, is the Model 3 pricing was so close to the Model Y that people would just buy the Model Y. But once they separate out that pricing, there's a huge demand. So yeah, you should check my video with Brian White that we did 3 weeks ago. And I've got tremendous amount of tables, charts. I've got so much research that we did on that. So check it out.
I'll do it for sure.
Okay. Well, thank you so much, Randy. Appreciate this. This was fun. We basically talked about what's going to happen to Tesla. First of all, the stock market in general for the next year, for next decade. We talked about what Dan Ives thinks it's going to happen to the tech boom in the second half of this year with the AI boom. And we talked about Tesla and what's happening. So thank you very much, Brian. Randy.
Absolutely.
See, I called you Brian.
Oh, yeah.
Okay. Thanks, everybody. Bye-bye.